Investing is one of the best ways to build wealth over time. But here's the catch. It's not easy. Behind every success story are lessons learned the hard way. Whether you're new to the market or a seasoned investor, these challenges never really go away. Today, we're diving deep into the hardest parts of investing and how you can overcome them. Let's get started. The hardest part of investing: managing your emotions. When the market is booming, you're on top of the world, thinking, I should have invested more. But when it crashes, that confidence evaporates and fear sets in. You're tempted to sell everything just to avoid more pain. Seasoned investors know the importance of emotional discipline. It's crucial to separate your feelings from your strategy. Remember, market downturns are inevitable. In fact, corrections defined as a drop of 10% or more happen on average every 2 years. But historically, the market has always recovered. Take the 2008 financial crisis. The S&P 500 lost nearly 50% of its value, and many investors panicked and sold at the bottom. Those who stayed invested, or even bought more, came out ahead in the years that followed. Another major challenge: the endless stream of information. Every day, there are headlines predicting the next crash or the next hot stock. Social media is full of people flaunting their supposed 10x gains. It's hard to know who or what to trust. Successful investors learn to tune out the noise. They focus on the fundamentals of the companies or assets they invest in and stick to reliable, data-driven sources. Warren Buffett is a great example of this. Despite market chatter, he focuses on businesses he understands and avoids speculation. As he famously says, the stock market is a device for transferring money from the impatient to the patient. One of the most common mistakes is trying to time the market. The idea of buying at the absolute bottom and selling at the peak sounds amazing. But let's face it, even professional investors get it wrong. What matters more is time in the market. The longer you stay invested, the more you benefit from compounding returns. Missing just a few of the market's best days can have a huge impact on your overall returns. Between 1993 and 2023, the S&P 500's annualized return was about 9.8%. But if you missed the 10 best days during that period, your return would drop to just 6%. That's the cost of sitting on the sidelines. Another challenge: figuring out where to invest. With so many option stocks, bonds, ETFs, real estate, even cryptocurrencies, it can feel overwhelming. And let's be honest, the fear of picking the wrong investment is very real. Start by learning the basics of each asset class. Stocks represent ownership in a company. Bonds are loans to governments or corporations. ETFs are bundles of assets. Cryptocurrencies are a whole different ballgame: high risk, high reward. If you're new, consider low-cost index funds like those tracking the S&P 500. They provide diversification and have historically delivered solid returns over the long term. Finally, discipline is perhaps the hardest part of investing. It's easy to stick to your plan when everything's going well. But when the market is volatile, or you hear about someone striking it rich with a new investment, it's tempting to abandon your strategy. The best investors review their goals regularly and adjust their portfolios only when necessary. They avoid chasing fads and remember that wealth is built over decades, not days. In the late 1990s, the dot-com bubble was all the rage. Investors who chased tech stocks without understanding their fundamentals saw massive losses when the bubble burst. Meanwhile, disciplined investors who stayed the course recovered and thrived. Investing is simple in theory, but hard in practice. It challenges your emotions, your patience, and your ability to stay disciplined. But by understanding these challenges and preparing for them, you'll be well on your way to becoming a successful investor. If you found this helpful, give this video a like and hit subscribe for more in-depth investing content. Thanks for watching, and happy investing!